On very simple day 4, I'm going to be talking about fair value gaps, that is imbalance. Another name for fair value gap is imbalance. So now we've already talked about liquidity sweeps, and also talked about candlesticks. Yeah. I want you guys to understand that in this, all these examples I'm giving you is just technical analysis, because that is what I believe you need. I always try to keep trading very, very simple for myself and for others too, because this is just what you need. You don't need all those fundamentals that when there is a draw on liquidity, this is when buyers buy. All those things are bullshit to me. That's my own idea, because regardless of whether you see that or not, market at the end of the day is just probabilities. So you just have I just get a system that I use, and then I trade with it. Without, you don't even need to know all those bullshit lapping. You don't need to know anything about that. At the end of the day, it all comes down to this technical analysis and how you use them, your risk management and the rest, of which you are going to learn before the end of this video. So imbalance, there are two types of imbalance, that is two types of fair value gaps: a bearish fair value gap and a bullish fair value gap. From the terms, you already know what a bearish is and what a bullish is. Bearish fair value gap is the gap that is created when price is going down, and bullish fair value gap is the gap that is created when price is going up. So I'll show you what the gap I'm talking about is. The gap is the distance between the last week of this first candle to the highest points of this last candle. You understand? That is the lowest point of the first candlestick and the highest point of the last candlestick is known as a bearish fair value gap. This here is the lowest point of the highest of the first candlestick. Lowest point of the first candlestick, and this here is the highest point of the third candlestick. As you can see, I mapped out the distance between them. So for a bullish fair value gap, this is it too. It is distance between the highest point of the first candlestick and the lowest point of the third candlestick. Very simple. As you can see here, highest point of the first candlestick, lowest point of the third candlestick. Very simple. It's just a gap that is created between three candlesticks. Simple. So how does this help in our trading, that is in technical analysis? Yes, we use it because markets often respect this gap. I hope you understand. Markets often respect these gaps in the market. Yeah, when chart is moving, when price is moving, markets respect it. So let me show you what it means by markets respect it. For this bullish now, yeah, let me mark it out longer so you understand. Yeah, for this bearish now, this bearish fair value gap, this one here, yeah, as you can see, price is coming down. Yeah, then it's created this gap. For a respect, we expect price to tap into this and come down again, something like this. Boom, boom, boom. This is the gap. I hope you understand. Very simple. If you don't understand, please join the Discord and ask questions. You get answers for free from me or any other member in the Discord. Very simple. And for the bullish fair value gap, price is going like this, going upwards, then comes down to tap into this, then boom. Very simple. That is how market respects fair value gaps. I hope you understand. Let me show you some examples here. Let me show you some examples. Ding, 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 ding. Yeah, this is one example here. As you can see, this is a bullish fair value gap. You can see market is respecting. Yeah, you can see it clearly. Market is respecting the gap between these three candlesticks, like this. You can see the whole view. Market is respecting it. So that is what I think you need to know about fair value gaps. Yeah. So on the next class, that is on day 5, which I might release today, we'll be talking about inverse fair value gap. After that, I will then show you how I use liquidity and the imbalance, that is inverse fair value gap, to enter trades. That is how I use them to actually enter trades. That is on day 6. So thank you. I hope you understand all of this, and join the Discord if you have any questions or something you don't understand here. Watch the video again numerous times. That is also how I also learned. I watched my courses numerous times before I understood, but I'm trying to make this very simple so you'll be able to understand it in the fastest way possible.